Hey YouTube, I'm Jimmy. In this video, I'm going to walk through my analysis of Procter & Gamble, ticker symbol PG. This is the 23rd video in our series where we're analyzing all 30 stocks in the Dow Jones Industrial Average. We're then going to take that analysis and build 3 different portfolios, a value, a dividend, and a growth. You can see a link in the description below to all the other videos. So we could break Procter & Gamble's business into a few different segments. We've got Fabric and Home, which sells brands like Tide or Mr. Clean. And then we have Baby Care and Family Care, which sells brands like Pampers diapers or Bounty paper towels. Then we have the beauty segment, which has different shampoos and things like that. Then we have grooming, which sells razors, and healthcare, which sells toothbrushes and toothpaste, things along those lines. Now, what's interesting about Procter & Gamble is that in the past few years, they've really struggled. This is a chart of revenue. And as we can see, revenue has been trending down. And even though we have the next 2 years of projections in there from analysts, they're the lines in green, well, we can see that not a lot of good things seem to be happening with revenue. Now, when we switch to profits, this is a chart of earnings per share. And as we can see, they had a bad year back in 2017, but even besides that, earnings per share hasn't done too much. Sure, we have analyst projections and they look decent going out the next couple of years, but if we just look at 2018 and we compare that $4.12 that they earned in 2018 back to 2015, which they earned $4.08, well, you can see that they didn't do too much in at least the past few years. But as I was researching Procter & Gamble, I found some interesting things. So if we were to go back just 5 or 6 years, well, Procter & Gamble had a lot more businesses, a lot more brands in a lot more different segments than they have today. For example, they used to own Pringles. Then back in 2012, they sold that to Kellogg. They used to own CoverGirl, the makeup line, but then they spun that out back in 2015. They used to own Folgers Coffee, but they sold it. Now, the purpose of all this shifting around the business, according to management, is to refocus Procter & Gamble's core business. Now, this partially helps explain the revenue chart and the struggles that they have. It's tough to grow revenue if you keep selling off a bunch of big brands. Another interesting example that I came across was back in 2005 when Procter & Gamble bought Gillette. That's their grooming business. Well, Warren Buffett's Berkshire Hathaway used to own Gillette. They had a huge stake in it. Then Procter & Gamble comes in and they buy Gillette for Procter & Gamble stock. So Buffett ends up with a ton of Procter & Gamble stock. But then in 2014, apparently Buffett wanted back Duracell, it used to be part of Gillette when Procter & Gamble bought it. So Buffett takes his shares in Procter & Gamble, trades it essentially to Procter & Gamble for Duracell, the standalone business. Okay, that was somewhat of a side note, but I thought it was interesting. Okay, so where's Procter & Gamble's business heading today that could either make it a good investment or a bad investment? So one thing that they're doing is they're trying to focus more on markets that are developing more quickly than the domestic markets that they're currently in. One market in particular is the Asian market. And there they've been able to post up gains of nearly 8% organic growth compared to their 2% growth in North America. Another big push that they're making is online. Now, Procter & Gamble realizes that they need to have a bigger online presence. They need to push with platforms like Amazon and Alibaba if they want to make meaningful inroads in the online game. One good strategic move they made a few years back, as an example, is that some of Procter & Gamble's warehouses, they share with Amazon. So I assume this is going to be a good thing for their presence on the Amazon platform. Now, one of the reasons I think Procter & Gamble could be an interesting investment is that they're striving to become a more leaner and more efficient business. They've been working on a $10 billion restructuring program. They sold off businesses that were not in line with what they describe as their core business, like Duracell or CoverGirl or their pet food business. And all of this is expected to lead to faster growth, improved margins, and a better long-term control of their business, which ultimately could be a good thing for shareholders. Along these same lines, Procter & Gamble has cut a bit more than a quarter of their selling general administrative expenses. They're reducing their distribution routes. They're improving, or they're trying to improve, the efficiency of their plants. Now, personally, I think that often large conglomerates like Procter & Gamble have to do this type of thing to their business every now and again. I think it could be healthy for the business, and if it works, it could end up being rejuvenating for Procter & Gamble stock. A stock that has done very little in the past 5 years. So what do we think Procter & Gamble's stock is worth? Now, I want to point out that as far as their $10 billion restructuring program that they're doing, well, about 2 years ago, they had completed a ton of restructuring and they rolled out a new plan that's supposed to go to 2022, I believe. And some of our valuation is dependent on their ability to complete this new round of restructuring and, in theory, make the company more efficient. So right now, their current PE is about 22x, and their expected earnings per share for 2019 is supposed to be about $4.40. Now, if we look at the consumer staples ETF, well, we can see that the average PE over there for the whole group is about 18x. So right now, Procter & Gamble's trading at a premium of about 20% to their industry. Now, this tells me that much of the pricing in the market is already accounting for the changes that Procter & Gamble's trying to make. And if I were going to assign a premium for Procter & Gamble over the rest of their peers, well, it would have likely been right around 20%, maybe 25%. But based on the fact that they're already trading at a 20% premium to peers, well, it seems that the stock is fairly valued right where it's at right now. And that assumes that they continue to efficiently execute their plan to rejuvenate their business. And there's always the risk that they don't. So for me, if they need to pull off their plan just for their stock to be fairly valued at the current price, since they're already trading at a 20% premium, what if they stumble at all? Well, it's likely that Procter & Gamble stock would fall. And to me, that's simply too much risk to get involved at this level. Personally, I would like it if the stock fell back to, let's say, that level. Well, that would be more interesting. But what do you think? Is Procter & Gamble something that we like? One good part is that Procter & Gamble is a defensive company, and that's probably the reason it did so well at the end of 2018. That being said, they have a decent dividend yield of a bit more than 3%, so perhaps there's a place for it in the dividend portfolio. But as far as the value portfolio, I'm not sure. I would much prefer it to fall. I think that it's too risky at this level. Any trouble here, I think the stock will pull back and give back some of the premium that they're currently trading at. But what do you think? Is Procter & Gamble stock something we should add to any of our portfolios? Let me know what you think in the comments below. If you haven't done so already, hit the subscribe button. Thank you so much for sticking with me to the end of the video, and I'll see you in the next video. Thanks.